Okay, everyone, welcome if you're new to the channel, and if you've been with me for a while, we're going to do an end of the day wrap on a pretty important pivotal day today in the stock market. I want to point out some key breakdowns in the charts. There's been some technical damage done to the charts that should set up for really a trend change ultimately, potentially, the top of the market, and some big moves here in the future. So again, if you're new to stock trading, understand stocks don't go down all at once. The crash that we saw back in March is pretty rare to see that at the beginning of a bear market or at the beginning of some sort of down move. Typically you'll see that kind of price action after it becomes obvious to everyone that the market is now in a bear market. Usually the way it works out is when you top out, you'll sell off, you'll get some kickback rallies, you'll have some non-believers, and then you'll kind of work your way lower, following the slope of hope. So bull markets they climb the wall of worry, and bear markets follow the slope of hope. So that means that hope has to stay in the market. So as it comes down, you'll have little kickback rallies. And that's what I'm expecting this market to do. But let's get into the charts, see what we got going on. How the day closed is important. So today, the technical damage really took place in the tech sector. And that's the triple Qs, the XLK. We'll look at that here in a second. But we got a daily close, first daily close, nice solid daily close as well, below the uptrend line that this market has really been in since April. So the entire systematic rally that this market has been in has now been broken. The trend has been broken. So for those who like to trade, the trend is your friend. Well, the uptrend is no longer your friend because that has been broken. So what I would look for now, at least what I'm going to be looking for, is opportunities to sell the rip. Here's what happened. Here's your daily close right there. We closed right there at 269.95. And that is a nice solid breakdown. It came in the form of a gap down and sold off and closed pretty much at the lows of the day. So very weak price action. And the uptrend right here is now broken. Nice heavy volume on the selling. Everything you want to see basically for confirmation that you have sell signals and they should remain intact. So where do we go to next? Well, here's the thing. We can easily have a kickback rally. This market has loved to do kickback rallies. However, understand that tech was an extremely crowded trade and everybody was piling into 5 stocks. I kept pointing it out. It seemed like repetitively day in and day out when we were in this steady grind higher, especially right in this last little part here, we were rallying on extremely thin breadth where we would see like Apple rallying and the rest of the stock market was selling off and one stock was rallying and it was causing the market to go higher. Or we'd see like 2 FANG stocks rallying and it was extremely thin. And that was a tell to me that this move was not going to be a continuation move, but really was a ending move and a move that was going to end this rally here. And that's why when you see those kinds of moves, you don't want to chase that stuff. You want to look for confirmation on a rally. You want to look for wide market participation. You want to look for volume. You want to look for all the signs that tell you that that a rally or a move is being participated. There's wide participation across the market, including the institutional participants. And we didn't see that, and therefore you get, a big sell-off. So far from the highs, you've got a, 11%, right around 11% drawdown. Okay, so not sure where I was at, had to pause the video. But Qs is, you've got a solid sell signal is the point that I'm trying to make. And this sell-off was, it was in the, it was, we didn't have a reason to short the market until we got some sell signals, but we got them. We first got it on the 60-minute chart in the triple Qs, and I told everyone I was getting short then. And now we have a daily, so we've got a bigger trend happening here. Now we could go sideways. That's completely possible, but I think. I think at this point, when you get moves up, it's kind of a sell the rip market, or it will be. So we'll wait to see what happens on the first rally that we get. But I'm not expecting, we could get a rally tomorrow or sometime this week. There's going to be rallies, but I'm not expecting us to just resume the uptrend like we previously saw, because that trend has been broken. Interesting enough, here the VIX. We saw the VIX, it rose slightly today, I believe. Yeah, the VIX rose to 31.5 about. But some of these derivatives like UVXY came down a little bit. I'm not seeing this doesn't look like the surge in volatility that you would expect on a big sell-off. For the tech sector to be down 11%. The VIX really isn't that high. I mean, 31.5, that's not that high. So probably some more selling is going to come into place. We don't see that repositioning really taking place. There's just been this initial move, but usually you would see an ending move happen on a spiking VIX, and we're not quite seeing that. So probably some more downside there. Let's look at the SPY here. Here's some confirming volume. Again, all these days right here that the market was rallying, really in, for the most part, almost all of August has been erased in a period of, 3 days? And that's how the downside comes. So oftentimes when I'm pointing out that, the market's rallying on low volume, I'm trying to give you a heads up that the next move is probably going to be the downside, because I'm not seeing confirming price action or confirming indications based on indicators, volume. There's lots of different things. That move is a confirmation move, and there's going to be a continuation. Instead, I'm trying to tell you that, hey, I don't know when the move's going to end, but it looks like this move is not being confirmed, and I'm going to look for a sell signal, and that should be the next move. And that's what we got here. 3 days, wiping out, 5 weeks, basically, 4.5 weeks, whatever, going back to, basically going back to August 6th right here. All these days were wiped out in 3 days. So, and here is, here's your, the SPY really broke trend. I mean, but you could mark this trend out. Here is kind of the similar trend that you saw in the Qs coming back to the April. This is where you started creating the systematic uptrend, where every single time it hit the trend line, it was being bought. You can see it was bought here, bought there, bought all through here, bought there, and then we broke. So that trend's been broken. Now, how far do we go down before there's a back test? I don't know. It's the same thing as when you go up. You don't know when it's going to end. Well, when you go down, you don't know when it's going to end. Usually it's going to go further than everyone expects. And typically, by the time it's gone down a bunch, you'll see that capitulation, people throwing in the towel. A lot of those investors that said that they're in it. What happens? Here's the mentality of what happens. You get the initial sell-off, and people that were all along through here, they start to take on some losses, and they tell themselves, well, that's okay because I'm in it for the long term. That's just the natural psychology behind people. When they start seeing losses, they don't want to realize those losses. They don't want those losses to be real. So what they do is they compartmentalize the process and say, okay, I'm in it for the long term. Those losses aren't going to be my losses because I'm holding this for the long term, and I won't have losses, basically, because over the long term, stocks always go up is kind of the mentality. And as the losses mount and mount, eventually the pain becomes too much. They see their account dropping too much, and they just decide to cut their losses and throw in the towel. And that's usually the capitulation move that you'll see. And usually that signals the end of the selling, at least for that downdraft. But as of right now, I'm not seeing, people throwing in the towel. So right now, a lot of people who have taken on losses haven't realized those losses. They're digging in their heels. As the losses mount, you'll probably see the volume pick up, the candles get bigger, and the selling really start to pile on top of each other. And that's the nature of a market when you have everyone crowded into 5 stocks. Now everyone all at once wants to rush for the exits. So when we start to see signs of that, of everyone rushing for the exits all at once, that's going to be the big down days. I think they're coming, but we could have a little kickback rally, keep the rally hopes alive by having a little bit of a rally, and then rolling over. The point that I'm trying to make, the bigger point, I guess, is the fact that whether we get a little rally and then sell off, or if we just sell off now, I would say the higher probability is the fact that we sell off. It doesn't really matter if you know that the highest probability is that we sell off. Then it doesn't really matter if we go up and then down or just down. We're going to ultimately end up at lower basically as the destination. So for me, because we just broke the daily chart, we broke the trend in the daily chart, and we did it over here on the Qs, which has been the strength in the market. There's now technical damage done. So now I just look for opportunities to add to a swing short position. So if we get kickback rallies, I add to my shorts, and ultimately I'll look for prices to continue to move lower. And they could go a lot lower. Nobody really knows how low they're going to go. This could be just a small correction. It could be the start of, kind of I think it's the resumption of the bear market, but I don't classify a bear market as up 20%, down 20%. Not when you have the Fed involved. The Fed pumps so much money. These market swings are going to be bigger, down and up. IWM, you can see here in the small caps. Small caps have been selling off. They have not hit their all-time highs since August of 2018. So you can't have a market you can't have one market where it's the FANG stocks basically making all-time highs and everything's fine over there, and yet 2,000 of the small caps and kind of the real economy stocks are continuing to sell off, can't make all-time new highs for years. It just doesn't work like that. You can have divergences over the short term, but over the long term, typically everything's going to converge into a single trend. And that doesn't have to be down, but what I'm saying is markets usually will trend in the same direction over the longer term. So IWM, you'll probably get a little pop, you're probably going to run down to this 145.50 and then hold there. That might happen tomorrow. Or the next day potentially, but 145.50 will probably be some sort of reaction will happen there, and then we'll watch to see where that goes from there. So I was watching gold today, and you can see here, this is the wedge on an hourly chart that gold's been in. It's just been coiling tighter and tighter, and we broke, but it wasn't that impulsive. But here's the breakdown. I want to narrow in on the breakdown right here. You can see here's the breakdown, then it recovered. Well, it started to drift sideways and actually break, and then it sold off. It had a kickback rally right here, but was rejected right there. So because gold, kicked back to resistance, was rejected, I think it's going lower. And one of the reasons why is when I see the dollar rose pretty steadily today, just continuing up, and gold didn't. Gold had a kickback rally. So some buy the dippers came in and bought gold even though the dollar was rising. So one of these is going to win out. And I suspect that the dollar's going higher and gold's going lower. Let's look at some sector analysis. XLV, second largest sector outside of tech. So very weak. I've been pointing this one out for a while. You can see that it rejected right up here at this resistance line. We get that from, making back in these June, you can just draw this trend line out. Again, I use logarithmic scaling. That's the scaling you're going to want to use if you want to replicate some of these. That's what the professionals use, is logarithmic. So I like to I like to chart according to what the institutional money's going to do, because that they have the money to move the markets. Retail can just move markets in thin markets and usually temporarily. So you can see rejected here, kickback rally one, sold off, closed the day pretty much at the lows. Not quite. We were a little bit lower, but pretty weak close in general. So XLV looks weak. If you go to the daily on XLV, you'll see nice clean rejection from right up there. 3 impulsive selling days. So to me, it doesn't matter if we go up. I think we're heading down to this 97 level on XLV. XLF, weak, selling off. So now we've got tech and financials both weak today. Essentially everything was weak today. There was no strength, and volume as well. You can see selling volume is coming in. So this is, there's really no strength in the market. You're seeing strong selling happening. So it doesn't bode well for the bulls at this level. Here's XLK. So this is tech minus Amazon. You've got, it's just tech without Amazon. And you can see uptrend here, broken impulsively. Today was a really good trap day. This is what I was looking for, and this is what I was expecting. I told everyone that it wasn't, when a market's rallying and it gives you, it's just rallying over and over, everyone says the trend is your friend and you ride the trend until the end. Well, that's fine, but today was the end. And you have to treat today as the end, because the thing is that the market's usually it doesn't give you just a nice clean exit. Like, it's not going to start to sell off and break this major trend line intraday and say, okay, I'm going to end now. Everybody who was long, go ahead and take your money off the table. It doesn't work that way. Usually what it does is it gaps down and traps some of that money, and that's what happened today. We opened today down quite a bit and trapped some of the money, kind of that late to the party money, trap it in there. And then, usually you'll see that continuation. So I don't expect this to just give that money an opportunity to get out with a kickback rally right away. I think we're heading lower first, and we'll see them, we'll see that capitulation move, and then you'll get the kickback rally. So that's what I see there. But trend is broken, and to me that says, this is the trend. That was your friend, and it was even your friend right here because you were at support. Friday it closed right at support. So, the trend was still your friend there, and all of a sudden the trend's not your friend. We broke, closed below. That's how you have to read that. Apple broke trend today. Again, Friday the trend was your friend right here, closing right at trend. Today, broken. Microsoft trend is broken. You can see these trends are pretty clean. Amazon trend is broken. Google, Google, this was your trend right here. Trend was broken. Google's down from the highs. It's down about 11% from the highs. So trend is broken. Some of these frothy stocks like Zoom, that got way out of control. Gapped way up here, and this is the uptrend in Zoom right here. So here's your uptrend all the way back here. So this trend's not broken. We could come down and tag this 294, 295, somewhere right in there. I do expect it probably gets down. It just depends on when it gets down here, but and then we'll wait to see what happens if this trend's going to be broken. But this thing just got outside of its price channel, and now it's coming back into its price channel. A lot like triple Qs. If I look at triple Qs here, you can see that the price channel, if I zoom it out, there's your price channel going all the way back to 2009 lows. We got outside the price channel. I expect this to ultimately get back within the price channel. Probably get a reaction here at the top of the price channel, 257, 258, somewhere right around in there. But ultimately probably head down to the bottom of the price channel. This is interesting. Corn, I pointed this out the other day, and it was showing relative strength today, still holding above this breakout point. You can see here, I've got this trend line going all the way back to June 13th. Clean little uptrend right here. We broke to the upside, and it's just been consolidating, and it looks like it's trying to break higher. And so it was strong today. And so that's interesting. DocuSign here, just getting pummeled some more. And DocuSign, here's your uptrend going back to March. Systematic uptrend, just moving higher. And then you broke. You did a full back test. That's why when you do back tests, those are objective areas to short something. So like the best area to short this would have been either here on September 1st or potentially on the fail break higher on September 2nd. This is when I got short, September 2nd, but it broke higher, failed, closed below support. So when you saw that, when I saw that, that was a good signal that this was, being rejected. And from that point, it's, from there, it's down, to 25% roughly. Pretty weak close today. Looks like it closed right at support or just slightly underneath it, actually. So we'll see if there's continued selling tomorrow. I mean, in general, the market, and especially tech, was very frothy. It looks pretty weak. So I'm definitely not looking for, there's going to be bounces. But the point that I'm trying to make is, from me at least, it's a sell the rip market. Any bounces that you get, bouncing into resistance is a good area to add to shorts when you get to resistance. There can be bounces. We can cut through a couple levels of resistance, but ultimately, I think you're going to have opportunities to short into resistance. And again, everything in this channel is just my opinion, just my random thoughts. Basically, I try to look at charts and speak my mind about what I'm seeing. And hopefully you're able to learn from this channel, learn some lessons on how to read charts. And if not, that's okay too. But that's all I got for today. Technical damage done in tech sector, and tech is the market for the most part. At least this market is all about tech. So now that that damage is done, I'm expecting further selling over the next days to weeks, and I'm going to be positioning accordingly. So thank you. Catch you guys.